Hey guys, welcome to LJ Daily Housing Market Update. Today is January 26, 2024, and let's get started with our interest rates. Interest rates for your 30-year fixed conventional loans were averaging national averages around 6.90 versus your FHA 6.20. We did not see any change from yesterday until today, but let's see, the next update will be on Monday. Okay, according to your Freddie Mac here, as of yesterday, they were around 6.69 compared to your 15 years, which was 5.96. Next, guys, when it comes to these credits, when it comes to these interest rates, just know there are many factors that go into when it comes to these interest rates. Number one is your credit scores. The higher your credit scores, the better or the lower interest rate that you will get. Your home location matters, your down payment matters, your loan term, loan type, your residency, and units. How many units are you buying? All these things do play a factor when it comes to your interest rates. Okay, let's talk about your buying power. Your buying power is increasing when these interest rates are going down. So you guys can look at this, for example, for $400,000 loan here, when the interest rate's at 6.9 versus 7.65. Person with 6.9 can qualify up to $400,000 with the same monthly payment of 2634 versus if the interest rates were at 7.65, the same person would qualify for $371,000. Okay, big difference when these interest rates are dropping. The point of this slides is to show you guys your affordability. So if you have a pre-approval from previous months, it's recommended that you go back to your loan officer and see what you are pre-approved in today's interest rates. We're going to give you two different examples for affordability here, two different households. So the first household has $65,000 income with $40,000 down payment. They only have $100 your monthly debt. This is your minimum payments. Everything else we're gonna leave it the same as the other one. So this family can qualify for up to $312,000, and the DTI that we're using is 45%. So you can go with higher DTI depending on which loan you're going with. Okay. Second family here is has an annual income of $110,000 and their down payment is $60,000 and everything else remains the same except for their monthly debt is $200 compared to 100. This family can find a property up to $573,000. Okay, so that is your scenario here. Next is your inflation. Your inflation is at 3.35% as of the last reading in December. Hopefully, this stays there or comes down. If it does, that will be a positive effect on our housing market. When will these feds actually cut these rates now? The hikes that they were doing, hopefully now it should be Fed cutting these rates. We're expecting them to do it in March or in May according to MBS Highway. Okay, the prices itself has been going up for a couple of years now, so even if they don't go up, we feel like they're already high. But if you would have more buyers trying to buy the same property as you in coming months, they were waiting for the same interest rates as you, guess what, the prices will not come down. As simple as that. It's just supply and demand. Okay, next, guys, we're gonna look at four properties here in Long Island. First one is in Freeport, listed for 549. This one has 4 bedrooms, 2 baths. Nice property here. If you're looking in Freeport, let us know and we can show you this one. The next one is in Massapequa, and this is listed for 675. 4 bedrooms, 2 bathrooms, nice luxury looking property. So if you're looking in that area. The next one is in Hicksville, listed for 747. 4 bedrooms, 2 bathrooms, nice property as well. So if you're looking in Hicksville area, let us know. And the last one is in Glen Head, and it's listed for 935. 4 bedrooms, 3 baths. Okay. So guys, every day we want to give you one term to learn. Today we want to talk about quit claim deed. It is going to be a legal document that basically says, hey, this person, you're going to release someone's interest from this title or in a property or not. So typically, a quit claim deed is used for a non-sale situation. So when you don't want to put this property on the market and you don't want to sell it to someone else, rather you want to sell it to one of your family members, then maybe you can do this. It can be used to add a spouse to the title after marriage or remove a spouse from a title after a divorce. Okay. Next, guys, if anybody asks you or if you're debating if the prices will stay same, will they come down, you have to look at home ownership in the long run. Hey, if I'm going to live here for 5, 10 years, is that a good investment compared to just renting out? Majority of the time, it will tell you that depending on which market you're in, that you're always appreciating on your assets. So your property is always going up, so it really depends on your situation in general. But when you look at this county here in Queens, you can see the stats for 5 years, 10 years, and up to 63 years. So you can see that over the years, the appreciation percentage has gone up compared to your Nassau. Again, you can see for 5 years, 10 years, and 60 plus years as well. So you guys can rest assured that overall market is usually goes up in real estate. So your investment should be sound, but it's all up to you. You know how which way you want to go. Next, guys, we want to tell you guys every day who's involved in real estate transaction and when they do come in and how important they are. Let's talk about your loan officer today, right? You should be working with at least 2 or 3 different loan officers in the initial stages. So when you are in the market, I'm just getting a pre-approved, I'm just getting started, I have no idea which area I'm going to be in. I want to talk to different loan officers just to see how much I qualify for. So this way they can give me a good idea. Hey, look at within this budget, that's what you can afford. And I usually go from there. But rather than just sticking with one loan officer, I want to go to 2 or 3 different of them and see what they say. Maybe a different one of them might say, hey, you qualify for $500,000. The other one says you qualify for 525. Another one says 550. You have to find out what is the reason behind it, right? Are they giving you different loan programs? Is there different ratios, DTI ratios that they're using? So a loan officer is going to be one of the critical person that's going to be in your transaction that's going to help you close this deal. So make sure you pick the right one. Next, guys, if you are trying to purchase in 2024 and you're just starting out, you want to work on your increasing your income much as possible, increasing your savings much as possible, decreasing your debt much as possible. Your credit cards and all that, try to decrease that much as possible. Your credit scores, you want to improve them much as possible. So your down payment savings wise, you want to save enough for your down payment for your down payment and your closing cost. So your down payment might be between 3 to 20%, depending on which loan you want to go with, and your closing costs between 3 and 5%. So make sure you have enough of those. At bare minimum, I highly recommend that everybody has at least 6 to 7%. So which one is 3% bare minimum of your down payment and 3% of your closing cost. So if you have more, that's even better for you. Your credit scores. If you're just starting out, your target should be to hit 580. Once you have 580, you want to hit 620 or more. And the higher the credit scores, the better for you. But just know when you're adding a co-signer, their credit scores have to be solid as well. Okay? And if someone tells you, one of the loan officers I mentioned, if you go to 3 different of them and one of them say, hey, I can offer you 5% interest rate, question that. How? How are you going to give me that when the interest rates are in general around 6.9, as national averages? So they might say, hey, I'm going to, you can buy down the rate. So the next question should be, if I'm going to buy down, how long will it take me to get that money back, to recoup that money, right? So if it's going to save me $82 per month, but it's going to cost me $4,000 initially, it's going to take me 4 years to get that money back. So you decide if you want to buy down the rate or not. Okay, guys. So a little bit about our companies here. LGA Mortgage team have about 16 loan officers. We have all the loan programs available, QM, non QM, first time home buyers. We can help you guys all, investors. So if you want to reach out to us for any assistance, please do so. And for our real estate agents, if you're watching this from a different brokerage, you want to check out our LJ Realty team, guys. We offer 100% commission to those agents that close 8 deals in 1 year. So no office fees, no desk fees. We give you all the tools, the training that you need. So reach out to us if you have any questions. Otherwise, thank you so much for joining. I will see you on Monday. Take care, guys.